Holy cow, it's already Calgary market update time again, and this one is a doozy. You're not gonna wanna miss it. Welcome back to another Calgary real estate market update with us here at Redline Real Estate Group on Redline TV. And my name, again, is Darren Langell, and I am one of the founders here at Redline, and I'm your host for these market update series. In this video, I'm gonna discuss the key items you need to know about the market data that was just released from February 2021. And at the end, I'll give you my few bits of advice if you are in the market to buy or sell right now. So let's dive right in. Well, 1 month ago, I was standing here pulling up a bunch of different articles that were seemingly painting this different picture of the real estate market. Well, it's pretty funny how much can change in just 1 month. The headlines now are all positive, such as these two top stories from just the other day. Banner month as sales and price jump. Prices spike in February while inventory remains low. So the only real question that people seem to be having right now is more geared to how long will this momentum be sustained? With oil prices rising and those restrictions on the pandemic easing just slightly, and there's much optimism and hope in the air. With that always comes consumer confidence to just make life happen and make real housing moves. Let's jump into the key facts for the month. Fact number 1. Now, as good as January was when I reported last month, we had 40% increase over 2020 sales figures. February bested it with 58% increase in sales. Now, as you can see by this graph, we were neck and neck with 2014. We beat 2012 and 13, and every other year in the last 15, with one exception, that blockbuster year of 2007. Here's another representation of how the month went in relation to last year. As you'll see, we outpaced last year all month long by that significant number. This is not the pace that we're used to having now. Last month, I said the last week of January was feeling more like an April or an August, not a January. Well, as we finish off February, we're selling on a daily average of about 74 homes per day. This is up 54 from that same last week of January. This is a 38% increase in the pace of sales in just 1 month. One extra thing to note on that: February was a stronger sales month than our best month of all of 2020, which was July, when all that pent-up demand came back as we start to really reopen as an economy. This graph below shows a progression from the start of the year to now. Now, sales are up across all property types as well. And here's a quick summary for you. Detached is leading the way once again with a 69% increase over last year. Row houses, townhouses, they're doing incredibly well as well with a 61% growth. Semi-detached continues to show strength with 31% improvement. And our apartment market continues to show positive signs with an increase of 35%. So across the board, we have a winner of a month in terms of our sales. All right, fact number 2, it's time to talk inventory. Last month, I mentioned that throughout the month, we saw the gap between active listings on the market in 2021 versus last year continue to grow. We were dropping off in relation to last year. What this meant was that despite those increase in sales from January, there wasn't as much increase in new listings. The listings were tempered and maybe just a little bit delayed. And the key term there is delayed. Here on this graph, you will see the active inventory in 2021 versus the 2020 graph. This story this month is a little different. This month you'll see we flatlined. We started and finished the month the same gap in inventory, which is about 21% less than 2020. This is about 1,200 homes. Now this is saying something because I just finished telling you that we had a 60% increase in sales. So you'd think with that pace that our inventory might drop off a little bit further. But that didn't happen because the second half of fact number 2 was this. our new listing inventory, that delayed new listings started to come back online this month, which didn't seem to happen at all really in January. This month we listed 2,848 properties, which was an increase of new listings over last year by 16%. And now where I'm standing, we have 4,519 properties on the market. Now looking at this relative to the last 15 years, you'll see we are inching further and further down to the low inventory track. Right now, this is the fourth lowest inventory February in the last 15 years. Now, as always, all four market types are acting a little bit differently. And here are those specifics. Detached, it's sitting with 30% less inventory. Row homes, 7% less inventory. Those semi-detached properties, 40% less. And then finally, our apartments, they are actually a little bit less at 2%. All right, fact number 3, maybe your favorite one. Prices. Everybody wants to know about prices. Last month I commented that we had this perfect supply and demand dynamic to be comfortable in predicting that prices will probably flatline, if not increase. And this is what started to happen. As a whole, right now, we are seeing that year over year, we've got a 4% increase in our benchmark sales price. The detached market, it's leading the way with 5% increase in price. Semis at 4%, and then both the row house and apartments at 1%. But all positives early in the year, which is a good sign for the recovering Calgary real estate market. By this little graph I'm pulling up, you can see where things really started to turn around, where in July, we hit the low point, that red point on the graph. And then things started to escalate month over month until where we sit today. Here I'm representing the price changes in a little different way. This graph shows all districts and all property types. And it shows the variety for which prices have changed across them all. Here you will see that it's almost all positives all across the board. I can remember so many times while I've been doing these market updates in the last 5-6 years that this graph was completely the opposite. All negatives with only a handful of positives. So this is a welcome series of events for us as Calgarians. Okay, those were the major facts, 1, 2, and 3. But now I'm gonna whip over to a short advice segment, provide you a little bit more insider information into these numbers. Now, if you've listened this far, it's fair to say that the market is rocking, it's rolling, and it's far better than we've experienced for a long time. But there's always a but. I want to temper the excitement just a little bit with some extra bits of reality that aren't really being talked about enough. There is buzz in the air. The word hot, hot, hot. I even saw the word Mad Max being thrown out in the news, both by media, agents, neighbors, and everybody in between. Now, I agree with buzz, but I also want to keep things in full rational perspective. So a couple things. Sales to new listings ratio. This is currently sitting at 65%. This means that there are still 35% of the properties hitting the market that aren't being scooped up in that given month. Now, 65%, this is great. Yes, it's up from 47% same time in 2020. But it doesn't mean absolutely everything that's hitting the market is moving right out. All right, point number 2, sales to list price ratio. It's currently sitting at 98%. That's really good. And that's up from last year, which was 96.7. But despite a lot of the attention being said and heard, it's not list price and beyond, like many of the markets in Ontario and BC. Again, guys, this is a great market, but it's not just pick your price territory and you'll get it. Third piece, days on market. We are currently sitting at an average days on market of 45. This has improved again from last year, which was a 57. But it's still a full month and a half throughout the whole city. Again, this is better, yes, and it's better than we've been for quite a while. But we still need to remain tempered in our pricing and listing decisions as realtors, advising, and of course, with consumers and your own expectations alike. And now what I believe to be the truest indicator of the pace of the market continues to be months of supply. Here's a graph showing the data from just February. As you can see by this graph, that this number continues to decline throughout the month, which means the pace continues to get faster. The CREB data, Calgary Real Estate Board, will show 2.46 at the end of the month. And then my graph shows something different at 2 because I'm tracking this by the day and by the week. So here we sit, 2 months of supply is a great, healthy market. Now that coupled with the days on market data, that sales to list price ratio data, and the sales to new listings ratio provided above. That's the full picture that I really want you to be aware of when you're making your decision. So yes, stuff is selling, in bunches, but it's not everything. It's not pick your price, and you may need actually to be patient for a little bit. So it would be my advice to price dead into the market right now. Price fair and maybe even a little bit incentivized, and the market will reward you. If you're over market, you could still be missed, even despite how good things are going. Trust me, I see sellers in this position every day scratching their heads and hoping that the market will catch them. It will in other markets around the country, but not here in the Calgary region. Now let me comment quickly on the variety of the months of supply across the property types once again. Detached, it's our hottest. 1.4 months of supply, that's it. Row homes, 2.6. Semis, again, they're clipping along as well at 1.7. And the apartments, despite their growth, they're still sitting with 4.5 months of supply. So again, just like that broken record, be sure to understand what market you are buying and selling in. It continues to differ greatly. So that is about it. Thanks again for watching another market update with us here at Redline Real Estate and on Redline TV. It's always my pleasure to paint the most accurate picture for everybody to enjoy. And like always, if you have specific questions for us about your neighborhood, your property type, your price range, the strategy, please reach out to one of our Redline agents so we can give you the right advice. And before you go, don't forget to subscribe, hit that notification bell, because I know you're going to want to hear me and see me again next month. Until then, have a fantastic March.